On the weekly time frame of the CHFJPY, we will observe that we have been on a long-term bullish momentum after the breakout and retest of that bearish trend line in the month of February 2020. Since the month of February 2020, price has continued to respect that bullish trend line as we continue to see higher highs and higher lows in the last 2 years. And this momentum has continued into the new year, where we saw how huge price move in the first 3 to 4 weeks of the new year. And this has been maintained right down into the month of June. If we scale down to the daily time frame, what we will observe is that we had that huge expansion begin in the month of March, and we saw that impulse leg up into 136 Japanese yen. Then we saw a retracement phase down into our golden zone area at 128 Japanese yen, after which we saw that impulsive move that appears to have culminated at 137.700 Japanese yen. From a technical perspective, if we look at what has happened here, let me bring out my retracement tool, then run it through the first impulse leg. We saw our price ran up and did a retracement into our golden zone area, which is right between the 50 and the 78.6% retracement before we saw this new impulsive move. Now, with the scenario we have here on the daily time frame, we don't know how far this leg is going to go. Is this leg going to go further away from this area, further away from this area, or are we going to see a retracement phase down into this bullish trend line before we see a trend continuation or probably a breakdown of that trend line in the nearest future? Now, that is a big question we really need to find an answer to at this point. Now, if we look at it from a technical perspective, if we project the impulse leg, this previous impulse leg into what we have here, into what we have here, definitely we could see that we still have enough room for price action to move before the decline to the bullish trend line we identified on the weekly time frame. So if you allow me to, for the sake of clarity and sake of being specific at this point, we should be bringing out our Fibonacci extension tool so that we can extend that impulse leg into the future and let us see um, the probable place where price could actually test before the bearish momentum begins. So if we do that, we will be looking at between the 1414% and the 127.2% extension of the previous impulse leg as an area that we could be looking forward to as a take profit target if price is still going to move further up as we head into the new week. So allow me to label this area for the sake of clarity. And okay, well, let's have something like this. So we have this area around here. So what this simply means at this point is that we still have around 300 to 350 pips to catch if price continue to move higher as we head into the new week. So how do we take advantage of any bullish momentum if that is going to happen as we head into the new week? Or is it possible that we are going to be having a bearish continuation to the downside from this area as we head into the new week? More clarity into this will be given if we scale down to a much lower time frame, let's say the 4 hours time frame for specificity. So scaling down to the 4 hours time frame, and this is what we have here on the 4 hours time frame. If we look left, we can see our price has continued to push further up since mid-May. We saw how price has been climbing up, finding higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. Then we saw the huge expansion that moved into this area, and then we saw traces that looks like a reversal pattern at this point, as we saw a lower high here that could probably send price crashing to the downside. However, we cannot yet conclude that days, because when we looked at the weekly time frame, we saw a possibility of price climbing up into that profit target area we identified earlier. So the first thing I want to be doing here on the 4 hours time frame is to connect the series of lower highs at the higher lows at this point to um, visualize the bullish trend line we just identified now. So bringing out my line chart at this point and connecting the series of lower highs, higher lows rather, we have a scenario that looks more like this. And then we want to be using this as our first yardstick going into the new week. So this is the first yardstick we have here, and we have price respecting that bullish trend line, emphasizing the strength of the buyers in the market in the last um, 4 to 5 weeks. So with this being said, if we zoom into what happened since the beginning of last week trading session, we can see our price respected the 135 point, was that I think 135.800 area, and um, last week began on 135.800 area, and price did not at any point break below that level, as we continue to see price climbing up into finding higher highs. However, in the later part midweek of last week, we saw our price came back down to come and test that bullish trend line. And one thing we want to understand is this area at 136 will now be our what's it going to be called now? Our key level area. Allow me to bring out my line chart so that we can have a specific area to count on going into the new week as our key level, as this will guide our action um, going forward, as a breakdown of this area could signal um, an outright reversal. And if we have a trend, if we have a continuation to the upside on this, then it would allow us to stick on the bullish bias. So we have a key level here at 136 Japanese yen, which I want to um, put right on the top right corner of this key level we just identified here. So going back to our candle chart rather. So going into the new week, what we want to be looking out for is this. If we look closely, like I said earlier, we can see that we have a reversal pattern here. We had the double top structure that looks like a double top structure. We had a breakdown of the neckline here, and then we might be looking forward to a retest of that neckline to send price going down. So at this point, I also want to identify this neckline of that reversal pattern so that we could have a clear visual of what our expectation is going to be like as we head into the new week. So we have a neckline sitting right around here at 136,500 area. So we have the neckline there. Let's label it. Let's give it a label, and neckline at 136,500. So we have that here. So this is going to be, we have the second parameter, which is the key level. We have the neckline, the third parameter, which will be guiding our action as we head into the new week. So what is it I want to be looking out for if we want to buy this pair? So for me personally, what I want to be looking out for is, as price has already tested this bullish trend line, and before I go further, it is very pertinent I make mention of the fact of how if price is right on a bearish or bullish trend line, how sensitive that area is, as we could be seeing a breakdown of that area anytime, or probably a trend continuation to the upside from that area. So as we head into the new week, what I want to be looking out for is to see multiple rejection of this area, on the lower time frame, that is a reversal pattern on this time frame, to join the potential rally to the upside. And if I see a breakout of this neckline and a retest of this neckline, I want to add more position to this trade when it go bullish. However, there is a possibility that we could have a breakdown, an outright breakdown of this bearish, of this bullish trend line, and the retest will give us a confirmation to join the decline to the downside. Another scenario where that comes to mind in terms of this bearish momentum is if price might come back into the neckline, come back into structure, then we look for reversal patterns to join the decline to the downside. And after which we see a retest of structure one more time, we could add more position to this as price continue to the downside. So on the CHFJPY, if we all with me since the last 10 minutes we've been discussing, we would observe that we have two scenarios to play around with as we head into the new week. The first scenario is to have our buy entry right above the key level, which is 136.215 after a reversal pattern is identified around this area on the lower time frame. And if that happens, we will have a scenario that looks like this. We have a potential as we look for take profit target at around 139,500 minimum area or 140 for take profit target, with our stop loss right below the key level at around 60 to 70 pips thereabout to play with. However, if we do have a breakdown of this key level, then there is a possibility that we could be looking forward to an entry right below key level at 135.875, where we will be having a selling position that looks more like this, and with a stop loss right around that neckline area, which will be giving us around 70 pips, and then we will be looking at a take profit target of how much that's going to be. Let's look at structure. If we look closely into structure, we can be heading into somewhere around here as our first take profit target. As we can see, that area has been a demand zone in the sorry demand zone in the past. So we want to be having this area as our first take profit target. And let me give this a yellow on orange. So we have somewhere around there, which will give us around 170 pips thereabout as our take profit target as we head into the new week. So I would like to pause the video at this point, but I would advise that you stay tuned in on this platform as regular updates will be published in the comment section of my TradingView account from time to time. The early hours of the new week might give us an insight into where price will be heading to, and I will surely do an update in that regard. Thank you for watching and do have a wonderful day.